Good morning, everybody, and welcome to this special webinar today to be delivered by the CEO and Executive Director of Toubani Resources, Mr. Phil Russo. Phil is going to walk us through the presentation that accompanies today's announcement on the ASX regarding the Kubata Gold Project Definitive Feasibility Study. There will be some time for questions at the end, and this video will be recorded. I'll hand it over now to Phil.
Thank you, Peter, and thanks everyone for joining us this morning in what is a really exciting time for Toubani. Today we've released the results of our 2024 definitive feasibility study, and what a time to do that when gold prices are at record highs. So today I'll just briefly walk through the presentation that was released on the ASX this morning. Just to note that this project has been reported on a 100% basis. There's nothing unusual about that. That's typically how studies are reported, just in the full disclosure. When we made the decision to update the previous Kubata feasibility study, it was because it was our view and the technical team's belief that Kubata was yet to reveal its true potential. Our strategy was to put Kubata's best foot forward, and I'm really happy to report today that we've delivered on those commitments. We have done what we've said we were going to do, and we've delivered Kubata and demonstrated that it is a rare oxide-dominant project of size. Some of those key milestones have been previously reported, so 2.2 million ounces in resources, 90% of those are in the indicated classification. Today we're delivering 1.56 million ounces in reserves at a gold price of only $1,650, which I'll talk through momentarily. Strong conversion of 78%. This gives us a lot of confidence in the deposit. 162,000 ounces of gold a year across a 9-year mine life. First 7 years are these high margin oxide ounces. Low capex intensity project of only $216 million, underpinned by one of the softest deposits in the sector. And our AISC is very, very competitive. Low strip, soft ore, simple processing. I'll talk through the rationale behind that. We've deferred the fresh rock capex. I'll go into that. And the economics of this project at a $2,200 gold price, nearly $600 lower than today's gold price, are really compelling. Those returns speak for themselves, and I'll continue to walk you through these. Some of the summary of the DFS outcomes. I will go through these things over the course of the next few slides. I'll just reiterate that we've used 2200 as our base case economics, and we've delivered a reserve grade here of 0.9 grams per tonne in an oxide dominant deposit, which has really set up this project for success. I'd like to just take a moment just to thank all the contributors to this study. Lycopodium is the study manager, Entech, Orlogy, Knight Pearsold, and these other consultants who worked tirelessly to deliver this study. And these guys have a track record of success. And so in terms of taking DFS conceptual projects and making them into mines, we've really used the leaders in their field here to deliver a really robust study. So 2.2 million ounces in resource, 2 million of those are in the indicated category. I'll just point out, so the bottom right-hand image here, which we've talked about before, that green there, 90% indicated in the deposit. That's an outcome of our previously reported resource upgrade in July, and it's because of that upgrade, which came about through our drilling earlier this year, that the study has delivered such strong numbers this morning. So it was all part of our strategy to drill the deposit out, increase our reserves, and deliver a really compelling study, and we've done that on the basis of a really strong resource. Like I said, 1.56 million ounces reported in reserves today. Again, 1,650 gold price, 82% of this 1.56 million ounces are these high margin oxide ounces, which is what separates us from our peers. And again, I'll just reiterate, there's no inferred in this schedule at all, or really only minimal, 50,000 tonnes. So this is a reserve life of mine with no meaningful inferred in the schedule. We've been really measured and thought out in how we've staged this project, how we've designed the mining schedule here. There are 5 stages for Kubata. As you can see in stages 1A and 1B, those are the low strip stages of the project, dominated or entirely in oxide ore. You can see how our strip ratio compares to other peer projects in the sector. I will say that stage 1A pit basically pays back Kubata in itself. So, what a wonderful position to be in, to be able to access ore early on in the schedule with minimal pre-strip. Again, consistent material movements, no wild swings. Means we've got a steady mining rate, steady profile. And again, I'll just underscore there is no inferred in this schedule. Kubata is as simple as it gets on the flow sheet. This is a proven flow sheet. The capex intensive parts that you would typically see in other development projects are not here at Kubata in terms of crushing and grinding and those upfront capex costs. That'll also flow through into our OPEX, and I'll talk about that momentarily. But it's as simple as it gets here at Kubata, which is why our capex is very, very competitive. Oxide gold production for longer. So this is a 6 million tonne throughput, mineral sizer into a ball mill. And then we've stepped down the throughput in the last few years when the fresh rock comes on. And that's all about having this optimal operating outcome. We don't want to push the throughput too hard in the harder rock years. And that just speaks to the balance that we had in delivering this study, not pushing it to the nth degree, and really considered in how we've optimised and delivered the project. In year 7, there's 70 million in fresh rock growth capital where we add some crushing up front. I will say that before we get to that point, we've delivered $800 million US at $2,200 gold price to pay for that capex. And after that point, there's still another $400 million US at $2,200 gold. So it is a great base case profile. It's really something that has taken us to another level. So 1.5 million ounces are recovered, 96% recoveries overall on this production schedule. We've got a seat at the table now with the plus 150,000 ounce development assets. This was our goal, is to reach this tier. We thought that this was the optimal approach for Kubata, and we've done that today. And this is us benchmarked with other development projects in the sector currently. Low initial development capital. You can comp this project with a recent peer, and you'll see that the capex that's in production, you'll see that the capex is in line with that. So again, we're not breaking records here. We've not pushed the execution on this capex to try and have the lowest possible number. We've adopted an EPCM strategy across processing and non-processing infrastructure, which means we've got a really balanced risk approach. It's not that Toubani is taking on all the construction. We're going to leave it with the experts in EPCM contractors like the Lycopodiums and that. So from a risk profile, that's the takeaway there, is that we're not trying to cut the capex to the bone. This is quite a balanced and considered number based on recent projects that have been delivered in the market. We are on our own on capital intensity. As I can see here, we are the lowest capex project for this plus 150,000 ounce benchmark. And you can see the intensity number there is quite compelling, and that drives the strong returns that you're seeing here today. On the cost basis, I'll just draw your attention to this image. So the bondwork index here, you can see where Kabata oxide ore stands versus these peer projects. You can see where our fresh rock stands versus these peer projects. And that is because of these technical characteristics of Kabata that is flowing through our operating profile, and we're delivering really low costs. So this is free dig, free milling, soft ore, and that is why you're seeing competitive unit costs per tonne in the mining and the processing. These are numbers that are not thought out of thin air. They're developed on first principles basis and based on the current operating environment. Kabata ticks all the boxes, as I've discussed leading into this slide. 158 million annual operating cash flow. That number is over $200 million at $2,600 gold. That's US dollar numbers. The payback is incredibly rapid. At today's spot of nearly 2,800, it would be more or less a year. The insensitiveness and the robustness of this project is really compelling as well. At lower gold prices, Kabata, given its low operating profile, is still highly attractive, highly economic. But you can see from the range of sensitivities that the project has got no wild swings. And I'll talk about it in a few slides. But what the delivery of the project today demonstrates is it puts us in a really good position to continue our discussions with Mali on the final mining convention for the project. But we're not done yet. Our strategy from here is really threefold. The first step of it is enhance Kabata. So while we've delivered a really compelling base case, we've still left opportunities on the table, whether it's drilling beneath the pit, it's some geotech, further geotech studies, blended strategy between our oxide and fresh can have further consideration. There's some CapEx opportunities, there's some schedule opportunities. We're going to pursue those from the get-go here in parallel with some drilling. We'll start drilling straight away, potentially next month, and we're looking for growing our oxide resources in the first instance. So the more oxides we find, the more impact positively it's going to have on our already strong economic profile. But there's a wealth of targets and a wealth of opportunity to explore here on the exploration front. So every 100,000 to 200,000 ounces that we can deliver can come straight into the mine plan, can defer some of those higher strip stage years, and I'm sure we can push the throughput at a design rate of 6 million tonnes harder in an operational scenario. So wealth of targets that we'll pursue almost immediately. And then at depth, this deposit has only really been tested to 110 metres on average. And so we're preparing a plan to put some diamond drilling below the pit, where several holes in our recent drill program earlier this year ended in mineralisation. So we'll be following up on those. But there's a really significant opportunity at depth at Kabata, remembering that the average depth of our current reserve pit here is only 180 metres across that 4.4 kilometre long pit. So there's an opportunity at depth also to extend our mine life. This is just on long section here. Again, this deposit is open. We're going to be working to de-risk Kabata here in three ways: on the community engagement, on the environment and permitting, and on our convention with Mali. We will update our ESIA now for this new study. We'll submit that hopefully early next year. And then similarly, we'll begin our RAP discussions with the local communities that are surrounding Kabata. On the mining convention discussions with Mali, I'll just say a couple of things here. We really run our own race in Mali. We're really confident in the project. We're really confident in the outcomes of the project, in that it benefiting all parties. We know that the government wants to see this mine built. We know that the local community wants to see this mine built. And our strategy from the beginning was to put the best foot forward for Kabata, the strongest economic profile that we could. And with that, we're pretty confident we're going to find common ground with our stakeholders in country. And there's plenty of benefits on a pie as big as what we've delivered today for all the stakeholders. And those are the tone of the discussions that we're having with Mali. And now that we've delivered this study, I'll be heading to Mali in a couple of weeks to further these discussions. But what we have is a government supportive of this mine being built and a local community that wants to see it built. And that's what we'll be moving forward on that basis. But no matter what happens in those discussions, I will point out there's still compelling equity value for shareholders in this project. It basically doesn't matter what Mali throws at us, we will be able to deliver a really strong project given the strength of today's economic results, which has us in a really great position. And just to conclude, we're not building this tomorrow. We've got a lot of work we need to do. Shareholders and investors can enjoy the re-rate 160,000 ounce a year projects for those types of margins do not stay at $65 million market caps for long in any market, in any regulatory environment. And so we'll be working to enhance the project. Like I said, we'll be looking to grow the project further, which will just strengthen Kabata even more and de-risk it across those areas that I just talked about. And this project will be firmly on the development path. It is imminently fundable and deliverable in today's environment. And that's what makes us, I guess, as exciting as we are in a strong gold market. And with that, Peter, I will end that walkthrough.
Thanks, Phil. Pretty comprehensive and a great presentation. I've got a few questions here, some of which you may have covered, but it's probably worthwhile reiterating. CapEx for Kabata at US 216 seems on the low side compared to similar scale projects. Is that a factor of the rock, singularly of the rock at Kabata, or is there an engineering angle?
I guess it's an element of both. So we are using a mineral sizer up front. This ore is very soft. It flies through the mill. Consumes its consumables are at the lower, consumable use is at the lower end, its power use is at the lower end. And so that's really what drives the reduced CapEx. A recent peer project that has a similar flow sheet to us was constructed sub US $200 million. So we know we have a ready precedent there and a comparable precedent to benchmark our CapEx against. And so we're pretty comfortable with that number. It's derived from real world quotes received as part of this DFS process.
And all-in sustaining costs of $1,004 an ounce must put Kabata in one of the lowest quartiles for potentially gold producers. What other attributes of the Kabata project enable you to keep these costs low?
It's again what flows through the entire value chain here at Kabata is the uniqueness of our deposit, and we've tried to amplify that in this presentation. And we've been saying that over the last 2 years that we needed to really focus on leveraging the nature of our deposit and setting this project up as one of scale, which means that we could drive the unit costs lower, and clearly economies of scale work. And the fact that we're in essentially a district here where there's a wealth of more oxide ounces to be found. We've put the right processing plant here that has a low cost structure, and really it'll help us unlock the belt, because over time you can see more ounces being discovered and trucked to a central mill. So it begins with our resource. It flows through the capital, the engineering, and into our operating costs. Again, those are on real world quotes, benchmarked with operating costs with peers to deliver those unit costs today.
Phil, a question on infrastructure. How's Kabata served in terms of power, water, road access, those types of things?
We're sealed road from Kabata to, from Bamako, 2 hours or so to the south. And it is, again, quite accessible by road. There's the Niger River is nearby, so we don't have a problem accessing water. And then for power, we've included in the study today a hybrid hybrid HFO and solar mix in today's study.
And Lycopodium, Phil, they're experienced in the area. What does that bring in terms of confidence, experience to in the engineering and project development?
Yeah, look, they're the premier West African engineer, and the market has a lot of confidence in projects that they're involved in and a track record of delivering studies and seeing them through into construction and doing them under budget and under schedule. So for us, we've got a lot of confidence in our partners in delivering this project through all the consultants here to really deliver a credible and robust project here that essentially, this project is a mine, and it's pretty clear to us and hopefully to the market today.
Now, Phil, Mali, there's been it's some interesting news over the last 12 months or so. I know you're regularly in country talking to the department. Can you expand a little bit on your relationship with the mines department in Mali?
Yeah, we have a really productive relationship here. We're very proactive in our discussions. But we know that there's a lot of noise in West Africa these days, but you just have to have focus in what you're doing and in your relationships in country and communicate proactively, like I said, and we do that. We've been waiting to deliver this study to move to the next phase of discussions, which we'll do in the coming weeks. But for me, it's a good problem to have. There's a mine here. There's plenty for everyone in terms of splitting that pie, and that was our strategy shown it here, and that's what we'll be talking about in a couple of weeks, is how we move this towards becoming a mine, which we know that they are supportive of.
I think that covers most of the questions there, Phil. Are there any messages you'd like to leave our audience with, perhaps about news flow the next quarter and what we can look forward to?
Yeah, look, we're no ordinary developer. We're going to be very active on the news flow front here. We're going to be enhancing Kabata. There's the drill bit will start to turn. There'll be news flow there. We'll be de-risking the project. But fundamentally, this is a company-making asset. That's what's driving our excitement. And for us, it's onwards and upwards at an incredible time in the gold market to really advance this project towards a shovel-ready status. So we're not going to be boring. We're not going to be hibernating. And I would encourage investors and shareholders to get on board the Toubani ride, because it's going to be an exciting one.
Thanks very much, Phil, for the presentation. Congratulations on a great DFS, and thank you everybody for joining us. There will be a recorded version available soon. Thank you all.